Hello and welcome to my channel, The Quality Investor. Today, I want to discuss 3 stocks that belong to boring companies, but will generate exciting returns for 2024. Each of these businesses seem mundane when compared to the high-tech world or the booming AI gold rush. But with strong business models and market-dominant positions, each of these businesses routinely generate above-average returns and beat the S&P 500. And they are all poised for a big 2024 due to their expected growth plans and rebounding industries. So before discussing these 3 stocks, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, please hit that notification bell so you can know right away when I post more stock analysis content. First on our list is Ulta Beauty, ticker ULTA. With the inflation of 2023 slowing down now and a strong Christmas shopping season just wrapped up, Ulta is poised to return to its 15% plus annual returns after a weak 3% year-to-date 2023. They opened 12 new stores just last quarter and have an aggressive growth strategy of increasing the total stores open to around 1,700 total stores. Ulta is the largest beauty retailer in the United States and continues to expand margins, proving to be resilient to both recessionary and inflationary pressures. They also remain committed to their loyal customer base, reaching a record 42.2 million shoppers last quarter in their loyalty program. And you can see, coming over to a series of charts that I have for Ulta, you can see they're currently at a 18.5 price to earnings ratio and have had great growth in all the important metrics, from their income statement, their earnings per share, even that one blip in 2021 of the COVID year, and of course their free cash flow. They've also really accelerated their shares outstanding buyback program. You can see here up here that they've definitely accelerated how much shares they purchase for shareholder rewards. And also their margins are also slightly trending upwards. You can see their most recent margin at 39.62%, and 10 years ago they were at 35.3% for gross margin. And you can also see the upward trend over time for their return on assets, return on invested capital, and return on capital employed. Expect more of the same as the consumer gets stronger in 2024. Next on our list today is United Health Group, ticker UNH. United Health dominates the health insurance space, which gives them monopolistic qualities and pricing power. In short, a strong economic moat. They strengthen that moat via complementary acquisitions that grow market share, diversify revenue streams, and gain access to new and innovative technology. This keeps their competitive edge, as well as adding new patients to their insurance rolls. The excellent management team uses capital wisely and efficiently, shown by continual growth and return on invested capital, as well as gross operating and free cash flow margins. UNH was basically flat in 2023, and with this down year behind us, look for them to rebound to their historical 18 to 23% annual growth. Looking at charts for United Health Group, you can see that they are a picture of what every investor wants to see. Just strong, consistent growth for income, earnings per share, dividends as well. You can also see that they've kept their free cash flow payout percentage relatively flat, right under 30% for the last 7 years or so, while also keeping a healthy gross operating and net income margins. And you can also see that trend of profitability for return on assets and return on invested capital and capital employed consistently growing. You can also see they are a very capital light business, allowing them to have ample free cash flow in order to buy back shares, pay out dividends, as well as reinvesting into the business. And at a 22.2 PE ratio, United Health Group is poised for a very big 2024. And finally, the third business today is Costco, ticker COST. Costco has been on a torrid pace in 2023, returning a remarkable 47.2%. That has pushed their PE to a very high 45.7. Despite this, Costco is just getting started. Their new CEO takes over on January 1st, but that won't slow down management's ambitious growth plans. Costco grows via new store additions and new memberships. They are expected to increase the membership fee in 2024, which will give a nice bump to their operating profit, as well as open an expected 25 new stores in 2024. Costco is a recession-proof business and has a business model that can't help but make customers spend money. Couple that with an ultra-loyal customer base and their best-in-class inventory management, and Costco shows no signs of slowing down. Costco routinely returns at least 20% annually, and if we see that same level of growth, we're looking at a share price of $800 by the end of 2024. And looking over here at Costco's charts, you can see that growth that I'm talking about, just a steady upward trend in income and earnings per share, as well as a nice payout of the dividend increasing every year. And they also keep their free cash flow payout percent relatively low at under 30%, 25.3% in 2023. They are trading at a 45.7 PE, which is pretty high, but given Costco's excellent business model and expected growth, it may be justified. Costco's also steadily seen their profitability, their returns on capital growing over the last 10 years. And they are also paying down debt while at the same time increasing cash. They have a net cash position of $15.2 billion in cash to $7.8 billion in long-term debt. Look for Costco to continue its torrid 2023 pace into 2024 and solidifying themselves as the best retailer on the planet. So these are my 3 boring businesses that will generate exciting returns for 2024. But before we go, I do want to remind you this is not financial advice and to please do your own research. With that, thank you for watching today's video. And what businesses do you believe will have a great 2024? Let me know in the comments below. And finally, please hit that like button. And if you found this info helpful, please subscribe to the channel and join our community. Thank you and happy investing.